What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 28th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to talk about setting market expectations. You know, a lot of people have been concerned over the last 7 days, last week or so, generally speaking, since we set in the previous all-time highs for Bitcoin's price at 67,000, a little bit above the previous April highs at 65K. And ever since then, we've been pulling down in price back down towards around $59,000. And all the while, I can understand the concerns that some people may have. I want to talk about why you need to generally set more conservative estimations than your fellow peers in the market, and why I generally stand out as a bit of a contrarian when it comes to the time frame expectations for setting in the all-time highs or the cycle top. Not just setting into new all-time highs, where we go above 67K, but really setting in that cycle top so we can know when to generally take profits if we so choose to, okay? Now let's just go ahead and take a quick step back. I'm not here to just parade myself overall or say how I get everything right. There's a lot of things that I get wrong, and there's a lot of plays that have outperformed my plays within this cycle when it comes to the altcoin market, right? I'm going to be able to say that completely truthfully and humbly. One thing that we were big on in this case, we were big contrarians on versus the general crowd, was that the correction back here between April and May was not the beginning of the bear market. I can't tell you guys how many people were stood on that conviction and they died on that hill. And outside of that as well, many people thought that when we came down here towards peak fear between May and June and July, that it was time that we needed to expect that this was going to break down. We're going to go down to 20K on this, and we stood the test of time in this case. We bought and we averaged in here on the lows, right? We took more risk here during the fear, and it has paid off since then. Bitcoin is back up, not only to setting new all-time highs back about a week ago, but here around $58,000. Now, one thing I just want to go ahead and talk about is this scale here of this recovery, right? We had one of the worst mid-cycle corrections in history. Around 55% correction from top to bottom. Now, why, in this case, am I talking about it being so good in this case? Well, the reason why is because we had a brutal correction like this, one of the worst of its kind. And since then, we've had two major rallies here, right, from their lows to their highs, where we've had an 80% return, 64% return, or if you want to put it in truthful perspective here, from bottom to where we are now, we've had around a 100% return in about 100 trading days. It's a little over 3 months from the new all-time highs from the lows. It was around 90 trading days over a 127% return, roughly speaking. I want to ask you all something here. Any market you can think about that's doing those kind of returns or is recovering from mid-cycle corrections and making a 125% return in about 90 trading days? I can't think of any, right? And what I want to jump into here is that the market has been performing phenomenal in the short-term time frame, and I think it's going to continue to perform phenomenally here. Now, it depends on what your time frame of short-term is. I think that's the next 2 to 3 months. I think that generally, even though we might continue this pullback a little bit over the coming days or the next week, generally speaking, we're going to recover relatively soon. And we're going to be continuing to press up to those all-time highs and possibly charter into price discovery, into new price range where we don't have any resistance. But I want to talk about the difference between the general broad negative public and the exacerbated, exuberant portion of the cryptocurrency space. We find ourselves somewhere in the middle, a more rational position than I think most people are taking, because most people are going to fall victim to their emotions or their own narratives. Usually in this case, you have people who are so perma-bearish on Bitcoin, they don't own any, they think it's going to zero, they think it's a scam, this yada, 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 yada. And they think that, or for example, maybe the bears that we talked about, they think Bitcoin's still going to go down to $20,000 or $15,000. If you're in that camp, guys, I can't change that perspective. And vice versa as well. There are a lot of people who are overtly bullish in the crypto space, who think that we're going to 150K or 200K within the next 4 or 6 months. And all the while in crypto, it could happen. I really think it's unlikely. Now, the reason for this is because of people's yet again, every single time, the overt expectation that things are going to happen in a shorter period of time than they usually do. The never-ending story of high expectations only to be let down by the realities of the market, right? And it's not being bearish on Bitcoin. It's just showcasing that we need to learn from our existing cycle. If May taught us anything, we have more exacerbated rallies and exacerbated corrections. And I think it's very clear at this point that we're going to probably have another May-style correction at some point or another, which plays into our topic, our more conservative estimate of expanding cycles. So, right, we can see here generally that the market is confident, right? Again, we are clear at this point, whether it's Bitcoin retapping into new all-time highs, altcoin dominance rebounding again when everyone was really fearful back here at around 52%. We've leaped up to 55% here, finding support on that line of previous resistance that we talked about that has played a huge role since back here in 2019. And Ethereum as well, starting to consolidate and set up for that secondary wave. We've got all the major signs here that the market is confident and charge forward. But what can it look like in a realistic time frame? Well, even though I do not want you guys to take my drawing here as absolutely, the absolute holy grail in this case of TA or how you should predict or expect the market to play out. I'm not here to say that. What I do want to emphasize is a few general concepts though. That one, the supposed cycle top that people are calling for when it comes to Bitcoin, a rally potentially here into Q1. I don't doubt that for a second, but I think it's going to be a more conservative one, somewhere around $100,000. We hit that big six-figure mark, right? And when we do hit that, I think it's going to play out as a pretty decent degree of resistance. And from there, we're going to have, and I know this is something that people don't want to hear or might disagree with, it's definitely contrarian, right? Is that we're going to have a correction of some sort. Over what time frame? I don't really know, to be completely honest with you all. We're taking a look at the 2-week chart here. But I think what we have drawn here is pretty typical with what we've seen before. It's exactly what we saw back here in April. And outside of the fact that COVID had exacerbated this, this is very similar to the June, July, all the way to the end of 2019 and 2020 correction, right, into March of 2020. Right? These very dramatic exacerbated rallies, corrections, exacerbated rally, extreme correction, right? Now, why, in this case, would it be okay for something like this to happen? Well, first off, this would actually be the least heavy correction out of the previous two. If you want to take it from top to bottom here, right, from the highs of the summer of June of 2019 down to the March lows, right, of course, we understand why it was exacerbated. All the markets were selling off. But it was a over 70% correction, around 72, 73%. Let's take a look here at the May correction, as we talked about earlier. About a 56% correction in the middle of the cycle, right? From bottom to top here, these are really incredible heavy cycle corrections, right? They're not bear markets, but they're pretty substantial corrections, right? If we take a look here from the $100,000 point to this correction, this would be right around 40%. Now, how amazing would it be if we had a breakout towards 100K here in Q1? We correct down and make the 60K previous resistance new support, and then we leapfrog up towards $200,000. Towards November of 2022, playing into the expanding cycles that we've seen time and time again for the last 3 cycles, where we expand anywhere from around 11 to 13 months. I think that is much, much more reasonable. And the reason why is because I'm emphasizing and learning in this case from what this cycle is all about. It's all about credit. It's all about leverage. It's all about people overexposing themselves not only on the long side to drive up prices, but people getting squeezed on the short side and vice versa. Longs getting liquidated, causing a domino effect. People leveraging themselves in order to short prices further and further, right? It goes both ways in crypto markets. And I think that it's very clear that this is probably going to play out a third time here in the cycle. Again, we've had many corrections in the past in Bitcoin's markets. But along with that as well, the thing that people don't talk about that is also differing in this cycle is not only the heavy corrections, but the heavy rallies, right? we should be seeing weaker rallies here and weaker corrections if we had a healthy spot market. Unfortunately, we've got excessive leverage in the market, right? Where you're seeing, for example, the rallies here, right, are more fixed and they're having much larger returns in the broader scheme of things. A 1,500% return from March here towards March of 2021. Really about a year in this case, a over 1,500% return, right? All of these mid-cycle rallies here that were followed by corrections were much smaller, right? And this was in the previous cycle where you should have had higher growth multiples, right? Only 200% return. Then you have the Jamie Dimon news back in 2017, right? We can see here it's getting a little bit crowded, but generally these 150 to 200% rallies in price, followed by corrections, right? And then you get the exacerbated blow off top towards the end. So we have multiple corrections. That's one thing. And outside of that, because of the leverage and credit, we're having more exacerbated rallies, which favor bulls and short-term periods of time. And I think we're entering into that next bullish phase here to get us towards 100K. But I can tell you all that people don't learn their lessons. This market is way too overexposed. It's over-leveraged. It's taking too much risk at the wrong times. And because of that, it's causing these exacerbated differences and increased volatility, whereas we should be expecting decaying returns and decaying corrections. That would be in a normal market. But in this market, we're expecting exacerbated rallies and exacerbated corrections. And I think those who are calling for, yet again, the all-time highs at 100K, to me, they come across as the same types who are saying that the top back in May, or the mid-cycle top at 65K was the end of it all. We were in the bear market. We were going to go down to 20K. As the data science models, time frame estimations, if those of you who believe in the expanding cycle theory like we do, and more than anything, my rational street smarts in this case, I'm not trying to say I'm really smart. There's a lot of things I'm not smart at. The thing that I've learned over the last couple of years and why I would play into the term of street smarts is being able to step back out of your emotions and say, you know what? Hey, it's probably going to take a little bit more time. It's kind of like when you're building like a product or service in this case. And I've actually learned this a lot going through being an entrepreneur in this case and trying to build out Digifox, for example. Things take a lot of time. They take much longer than expected. And even though you should set optimistic expectations when you're building things and you should be continue to drive through and pressing hard and making sure that things are happening, at the same time, you need to set your expectations on a conservative basis. You need to be rational with what can be done within a given time frame. The same goes for how markets are going to build up over time. To get to that 100K level, 150K, 200K level, each of those intervals, when you're talking about 100K to 200K, the kind of liquidity you're going to need to get price from 100K to 200K is massive. And we don't have TikTok support this time around. Wall Street Bets has faded off a little bit. So you got to figure out where you're going to get that liquidity. It's probably going to be the continued adoption from institutions and the new increase of financial on-ramps through ETFs and other products that are going to drive that. And I think it's just a matter of time. It's not a matter of if, but when. So if we can keep our estimations more conservative and keep in line with the expanding cycles, which calls for us, yet again, to go up to new all-time highs and setting a cycle top in November 2022 with altcoins following over the next month to 3 months, we've got our roadmap printed out. And we don't have to worry about us not clearing through the previous all-time highs and just rallying onward, right? Things just don't work like that. But what's so cool is that you can't beat crypto. So don't worry, you're not in the wrong spot. Don't worry about equity markets. Equity markets, can make an annualized 10, 25% return. That's cute, right? We'll go to that when we need to, when we're in the bear market. But let's go ahead and continue to keep on pace with our exciting expectations for crypto because everything's pointing towards crypto continuing to rally. And I think that we're going to see a 200K cycle top or close to it in this cycle. I'll stand by that conviction. I'm more on the optimistic end, but I'm in this case, a pragmatic optimist. My time frame estimations is the differing factor than other traders and investors. And we like being contrarians here on the channel. So anyways, guys, that's it for today's video. I've rambled on enough. I hope I didn't say, in this case, too much or too many supporting words. If I did, you guys can give me a hard time in the comments, give me a good laugh. And if you guys like the video, drop a like, consider subscribing and hitting the bell icon. It's one of the best ways you can support the channel. But I'm done rambling for today. I'll give you the rest of your time back, and I'll see you all in the next video. Take care, everyone.